Alright, good morning, guys, and it's TRP here, and I'll be your host, your tutor, and your mentor for this class today. Okay, so quickly, this video should not take long. I want to show you what you can call or may be known as an A plus setup. Your A plus setup. Sometimes you'll be hearing about A plus setups, A plus setups. You might not necessarily know what to mean by A plus setup. An A plus setup is just simply your best setup. So this setup is the best setup you can find that works for you at least 80% to 90% of the time, because it's not possible to have a strategy that works 100% of the time. There is no trader in this world that is 100% correct. Losses are normal. But now this setup is a setup that you have back tested, used, and it works most of the times than other setups. So I'm going to teach you an A plus setup that you can learn instantly and start gaining money instantly with it. So now, to analyze this A plus setup, you need what is called time frames. Time frame. You need to utilize time frames. So the first thing, you must do your top down analysis. You must, let me just add that here, you must do your top down and sorry analysis. You must do your top down analysis first. So you have to utilize different time frames. Like, you have to utilize different time frames. You have to use the 1 day time frame. From the 1 day time frame, from the 1 day time frame, you drop down to the 4 hour time frame. Drop down to the 4 hour time frame. So then after the 4 hour time frame, you can either drop down to the 1 hour or the 30 minutes. I usually use the 30 minutes. So now, basically, what you're looking for in the 1 day time frame is to know your directional bias, to know the institutional order flow. So you look whether the market is in an uptrend, whether it's going up, or is in a downtrend, whether the market is going down. If you don't know about trends, there's a video on it in this channel. You can go there and watch it. So you know the trend of the market, you know where you're in, and the possible places of demand or supply where the market can reverse for. So then after that, you drop down to the 4 hour and confirm your structure. Then entries happen in 30 minutes. So for example, this is your 1 hour time frame. This is a 1 hour time frame. Let me just use this. Forget about the consolidation on top, you just a box. So this is your 1 hour, this is your 1 day, this is your 4 hour, and this is your 30 minutes time frame. So basically, what you're looking for, let's say this is the 1 day time frame. This one here is the 1 day time frame. So in the 1 day time frame, the market can be in an uptrend. So you know that the market reacts from demand and supply. So in an uptrend, the market is reacting from supply. Yeah, supply. So you are expecting market to come in any structure that is below this place. Let me mark that out. That is below here. Anything below here makes the market efficient, and the market can react from anything below here. You get? Anything below there is a supply the market can react from in an uptrend. The market to come down to maybe a order block or FVG mitigation block or any block that the market wants to react to and go up. So let's say you are here. You are currently here in the 1 time frame. Or let's say the market, you know that the market should come to a block here to react before buying. You know that. So you have confirmed your bias in the 1 day time frame. This is the 1 day time frame. You have confirmed your bias. You know the market is coming down to react from this demand here, and go up. So you know that. Then you drop down to the 4 hour time frame. In the 4 hour time frame, you probably see, let's say this is what you're looking at in the, don't know how you understand what I'm saying. This is what you are looking for in the 4 hour time frame. In the 4 hour time frame, you're going to see something similar to this. You see, sorry, oh God, yes, okay, okay, yeah, you're going to see something like this going up. Then the market kind of like starts a new downtrend to go to the area of demand here before continuing the uptrend. So now you do not see this shift here and say, okay, the market has changed character, let's go bearish. Even if you're going bearish, your bearishness should not go beyond this demand here. So you can counter trend, go bearish when you see a shift like this. You can choose to sell, you can choose to sell from the breaker block here or from the other block, anything. But you know that the market is heading somewhere. Whenever the market is moving, the market is heading somewhere to an institutional reference point before it continues its original trend. So then when you see this, you drop to the 30 minutes and your entry or calls on the 30 minutes. So now what I'm trying to show you is that when you see now the A plus setup, the A plus setup occurs when the market reach this demand here. Now, because of this shift here, when the market gets to the demand, you do not buy immediately. You do not buy immediately because the market takes out liquidity. The market can choose to go down here, especially if there's an unmitigated demand here. You can choose to go down before going up. So you use what is called confirmations. You have to use confirmations. Now, the confirmation is this is your institutional reference point, and you're expecting the market to come into this place and move up trend. So what you have to do, you do not buy immediately. This is your 4 hour institutional reference point that you have marked out. Maybe a 4 hour order block or a breaker block. Your A plus setup consists of 3 phases. Number one, a liquidity sweep. Let me write that out here. Number one, a liquidity sweep. A liquidity sweep. A liquidity sweep. Two, after a liquidity sweep, you see a change in state of delivery. Then after that, you enter maybe on the other block. That's the entry. Once you have confirmed the liquidity sweep and the change in state of delivery, which can be a change of character or a shift, then you can now buy. You can now enter. You get? So what do I mean? Because the market, before it comes down, you see something like a mini downtrend like this. Then you are looking for the market to sweep this low. To sweep a low into your institutional order flow and institutional reference point. That is your order block or whatever you want to buy for. If price does not sweep this low and keeps on going up, you do not buy. Price has to sweep a low into that place. Then this now is your liquidity sweep. Then rapidly after this liquidity sweep, the next thing you're looking for is a change in state of delivery. This now is called a change in state of delivery. It confirms that the market wants to change its trend. Until you see this thing, this change of delivery, you do not enter. Do not enter until you see this shift here. So, your bias. So after this, you can either enter from the other block, from the breaker block, FVG, or any other thing that you can see here. So the market will now can now come down to here or here and you buy. Okay, now let's go on to the real life chart and let's see this. Let's see this. Okay, before that, let me clear out all this stuff here. Let me clear out all those stuff. Yeah, sorry. Let me just clear that out. Let me just clear that out. Alright, now because I caught a trade here and I want to show you exactly how I did that. So you start from the daily time frame. I caught that trade around here. So the first thing, you have to go to a daily time frame. Just from anything from here, from here down should be. Let's just not look at it. Yeah, you can look at this like okay. Now I was here on the chart. I looked at daily time frame. We for this period we are bullish, yeah, but overall we are kind of going down because of this break of structure here. So if the market has to really confirm bullish, it has to break above here, above this point. Yeah. So the market was coming down, and I saw the market moving to this place. Okay, not that place. I saw the market. Okay, I saw this. Then I dropped down to the 4-hour time frame. The 4 hours. In 4 hours where I saw something very interesting. The market was moving up with these breaks. I have a break here, a break here. The market was moving up, yeah, but there was another block here that had tendency of pushing price down. That other block that I saw. So I was waiting for price to come into this other block and give me a confirmation that the market wants to before I sell like a coach. Because you have confirmed that the market, look at it, is bullish, is going up. So you don't just enter a gold, you have to wait for confirmation. So when I saw this, when the market is here, you drop down to the 30 minutes, which is exactly what I did to the 30 minutes time frame, and that is where the interesting part happened. Now look at the 30 minutes time frame. Remember what I told you, the first thing you are waiting for is a sweep, a liquidity sweep into that high, which occurred right here. This is a sweep of a low or a high into the high, into the institutional reference point. Then you wait for a change in state of delivery, which happened right here. Very, very clean move. Happened right here. That's a change in state of delivery. It's not actually a shoot because a change in state of delivery shows that. So what do you wait for? Now there are three ways to enter from here. You can either use a breaker block, an order block, or a mitigation block. I can't teach that now, but I'll just show what I did. So now all I did was, sorry, let me reduce this so you can see what I did. So now when you see that changes of the delivery, you can see the clear order block here. is a very valid order block. Why? Number one is the liquidity clearing candle and is close to engulfing bars. I'll see that later. Engulfing bars, and it's it cleared the high. So you look. So now this other block does not have inducement. Does not have inducement. That is why the market went all the way up to here to take out inducement, to take out the liquidity on the other block. So a patient trader can place your entry at the top of it because you know that liquidity has not been cleared. But what I did was to place my entry right here. Right here. You get that? And your stop loss is above the highest highs. But if you're the kind of trader that here. So now this is exactly what you're looking for. A liquidity sweep, a change in set of delivery, and price RTOs, that's return to other block, to your POI and goes your way. Very clean setup. And my target was in this low. Right here. So, and that is a clean 5. Very clean. It's not even take time like that. Very how to do it just if you wanted to here, because you can see this break of structure. This is a break of structure here. Break of structure POS. Break of structure. The price came back to another order block. Sorry. And price came back. Oh god. So sorry for that. And price came back to the order block right here and sold again. So you would have a lot of money off this trade if you just this simple strategy. This simple strategy. Yeah. Then if this is actually advanced, but there's another entry here. There's another entry here. Okay. But let's not bother ourselves with that. So you would have made at least 10 hours. That's fucking $1,000 or so from just knowing this simple strategy and this simple setup. So that's it. That's it. So what you're looking for is number one, price comes into your higher frame reference point, then you wait for it into it, a change in state of delivery, price comes back to your other block, weaker block or whatever, and price moves down, to your TP. So that I would love to show you the example, but I think I'll stop here so that the video will not be that long. See you guys in the next